It was really important that we formed this panel with someone who knows about the law, because of course we're talking about ways that people are getting around the law, and someone who is involved in the trading side, because of course it's the trading habits that are allowing people to get around these laws. So I think we've been able to cover the entire aspect of it with these two fellows. So let's jump right in, and we're going to start with a bit of a look into what capital controls are. We don't expect you guys to be experts in this, but luckily we have one. So let's start. What are these capital controls? Where are they found? And how do they operate?
Well, first of all,
Hello? First of all, I think everybody hates lawyer in crypto space.
by the way.
And in terms of capital control, in the definition under Chinese laws and regulations, basically we can classify bank accounts into two categories: current accounts and capital accounts. For the current account, basically is what you're going to buy, what you're going to sell across border, and that is subject to the very minimum requirement. And for the capital account, for example, if you are buying something in a foreign country by wearing your money abroad, that is typically considered as a capital account transaction. For example, if you're trying to buy a property in the city of New York, it's probably going to cost you $1 million. And how you're going to, wear all the $1 million out, it will be subject to very strict, regulations. And under circumstances, that money is actually not able to be weared out at all.
So how do these capital controls work exactly? Who is in charge? Like, do the police come to your door and say, what have you done? Or have they deputized their banking sector to do a lot of this work for them?
There is a ministry under central government called SAFE, S-A-F-E, State Administration of Foreign Exchange. That is one of the largest, one of the highest, most powerful ministries in People's Republic of China. So SAFE is responsible for implementing all the, actually drafting the regulations. And there will be delegate local banks to implement all the detailed, procedures. Let's say, for example, if Jack, I would like to wear 10,000 US dollar abroad, I would just need to go to the bank and tell them what's the purpose of the awareness and why do you like to wear the money out. And SAFE is not going to be involved in that, but the bank will implement the very strict implementation and analysis of whether or not this is considered as appropriate transaction. So essentially, the bank, the SAFE, is formulating policies and getting all the regulations done, and the bank typically will review all the transactions. Again, what I'm talking about current account, but if we're talking about capital account, there will be slightly different set of rules.
And what are some of the reasons why these things are done in the first place? Why is China embracing this approach?
I think this is not about China. I think a lot of developing nations having this sort of capital account, this kind of restrictions. For most of all, I think it's related to economic national security issues. Because if when a country is highly developed, there will be tremendous opportunities for the country to be prosperous. So the U.S. dollars and will be coming in. Let's say if there's no capital control, and if you pump the real property into a certain level, and people will be selling properties out, right? And all the money will be flying out of China. So that will be some sort of, just one of the examples why this capital control is in existence. Again, this is not only in China, but a lot of countries, I bet in Korea as well, that they do have this sort of arrangement imposed by government.
So what you're saying is a lot of these capital controls are a way for countries to move their economy ahead in a forward direction, and in case they need to put some financial stimulus in there to devalue their currency, they have that option open to them.
Well, I didn't say that, but I think it's probably one of the reasons that any developing nations in the world are having this sort of rules.
So would you say it's fair to say that, for example, in America, the Federal Reserve has two really important levers: monetary policy, where they can print more money, and interest rates, right? So they have these two levers. Would you consider capital controls a third lever that some of these countries use, a third tool in the toolbox of the central bank, which maybe doesn't exist in some other countries and is equal to these other two levers?
Well, I'm not an expert in really in this part of policy level thing.
The central bank aspect.
Yes, and what I can think of is that it's fair to say that a nation has its own sovereignty over certain type of issues. And United States, for example, doesn't have this capital control related issue because it's a highly developed nation. For the People's Republic of China and Korea, I believe, we're still developing. And we need certain ways to protect domestic industries, and we need to protect domestic stabilities. So whether or not we like it, it's still there, and it's not subject to my decision.
But the UK did have capital controls up to the 70s, so it's not just countries that are developing. These things do exist in other countries where they have to mitigate some degree of capital flight, so they make sure that they control it, and that's what happened to the pound in the 1970s.
Okay, I agree.
Yeah.
I think this one is not just applied to China and Korea, and then maybe for most countries that do the export, export country, they do have such kind of policy to protect their capital outflow, because otherwise people would just earn money and live away.
So within these capital controls, now there are ways to get around them that aren't cryptocurrency. Can you maybe describe some of these ways? And they're not always nefarious, right? Like a Korean student might have to pay tuition at an American university, which is beyond the $50,000 a year limit in a current account. So what are the ways that this can happen, and what are the ways that some people already use to get around capital controls?
For Korea, all the limits is like 10,000 per transaction. So for most of the people, to transfer more than 10K each time, they have to apply to the Bank of Korea and then get approval to send the money outside of Korea. But with the cryptocurrency, they can do it freely now. So and then for every person in Korea, they have a annually capped at 50,000. So, it's not that, in Korea, it's not that you cannot send the money more than 50K, but it's just another due diligence that is very exhausting, that you have to apply to the Bank of Bank of Korea, and tell the government that what you're going to do with the money. So, yeah.
So if a Korean wants to buy a home in America, for example, using their banking in Korea, then they would have to apply to that bank and make their case and all this other stuff.
It's not easy for a Korean to buy a property outside Korea.
But in China?
I'm not Chinese.
So that's why I really like CoinDesk. This guy is really asking very sensitive questions that a lot of outsiders want to know. Let me give you a standard answer, right? And the standard answer is coming out of a lawyer. Standard answer is there are certain channels that legally will be allowing you to transfer money from China to abroad. Let's say, for example, if we're talking about a large real estate transaction over, let's say, a few million US dollar or billion US dollar, and there are a set of the rules domestically, and you will just need to follow the rules, right? And you just apply for the license, and it's based on the policy of that period of time, particular period of time, whether or not the ultimate decision maker, which is safe, is willing to issue the permit. So that will be the standard answer. You have very lawful rules to get it out. And certainly there will be some, situations whereas you don't want to follow the rules. So what typically people do, according to my, observation,
Well, you've
a
got
lot
a
of
great bird's
people
eye view.
using, casinos, right? And a lot of people using underground channels. In Chinese saying this, 地下钱庄, right? And people who helping people to move the money out. And there will be also sort of not in gray area, but let's say we are relatives, right? And we have a family member in the United States and they want to buy a property. What we're going to do, we just use every, one of our quota to pull together and to wire the money out to the designated bank account in the United States. But sometimes it really doesn't work out because there has been a very strict rules and regulations imposed by the People's Republic to monitor that type of transaction. And also in the United States, there are certain regulators are looking at a bank account, whether or not this is suspicious, whether or not this is money being laundered. So we see a lot of patterns coming out of China, but it's currently being challenged consistently by the regulators, not just here, but in the United States.
So would you say that it is similar to the reporting regime that we would see in America for anti-money laundering and terrorism financing, the same sort of risk-based approach where they see certain circumstances and have to act because they see a confluence of things happening at once?
So I can share one of the cases we have been representing for a client. I wouldn't disclose the name, but the client was being inquired by a regulator in the United States and exactly asking, it's a little bit suspicious, right, transaction. What's wrong? And can you provide, documents and let us know what exactly happening? So my client is based in China. It's a financial institution. And that's pretty much.
So it's the same kind of deputization of the financial sector to help the government deliver on certain policy promises.
Right.
So last question before we jump into the real crypto trading side of all of this. And that is, to what extent are the enforcement of these capital controls variable? So do they become more strict in certain circumstances? Are there trends behind them, or are they pretty much uniform? Are they practiced the same way, depending on the year or irrespective of the year?
I'm scared. This guy is always staring at me, right? Please.
I think they'll just keep the current trend line, but with some loopholes always. And then we can say like this is kind of like sandbox, and then actually happens in all kinds of like industry. Yeah.
Okay, great. So let's move on to the crypto side of it. What is different? So we've talked a bit about capital controls. We've talked a bit about the ways people get around capital controls previously. Now we see cryptocurrencies enter the stage. They've been described as kryptonite to capital controls. Could you explain what that means? Kryptonite being the thing that makes Superman so weak, the ultimate weapon that can just take away all this power. What makes cryptocurrencies so different than the other tools?
So cryptocurrency is regarded as a virtual community in most of the country in the world, like Korea, like Taiwan, maybe in China as well, right? So they are one of the, enzyme for the industry, for the people to use it as a methods to transfer the capital from a country to another country, or from a point to another point without any other form. So it is very convenient for people because they are changing the methods. They sharing and exchange the value. But the only problem maybe now is like about the liquidity. Yeah.
About the
liquidity.
Liquidity.
Yeah, because you can do a transaction for like few millions easy. But if you want to transfer like 10 billion, it's not possible. Not that easy.
Sure.
To find a next holder.
Yeah. But what about the idea that it's more accessible now? that there are ways to get smaller amounts converted to a cryptocurrency to mitigate any devaluation of a currency. For example, recently China devalued the currency. From your perspective, running an exchange that's allowing a lot of these trades to happen, do you see anticipation around these events? Because it's not different, it's not like in America. No one expects the government to ever devalue the currency in America. But there is a history of this in Korea, the IMF intervention in 1997. Of course, China didn't do any devaluation for a long time, but we've seen a trend again. So people have seen this before in their lives and are prepared for it to a certain extent and expect it to happen. Do you see a lot of activity around these news events? Do you see people trading off of the news in China?
You can see like the Bitcoin price actually goes up from 3,000 to 10K. Just arise back with the tension of the US and China trade war. I mean, it's since like last October. So just like what we expected and what we've seen, they are like positive relevance, and that the price actually goes up just as long as the liquidity of the currency. So, yeah.
I think there are a lot of good things about cryptocurrency. Just to answer your first question, it's very fast, it's very reliable, and you can transfer large volume of money within, let's say, a few hours. But traditionally, if we are going through the banking system, it takes at least 2 days or 3 business days to get the money from country A to country B. So that's certainly the good sign of using cryptocurrency to getting money out of a country. And for your question related to the trade war and related to the number of people, whether or not they are interested in investing small amount of money, definitely I see a lot of my friends asking me, hey Jack, you have been advising clients for a number of years, and you have been a trader for yourself as a very liberal type of lawyer for many years. Can you give us some advice? And people around my age started to look at the cryptocurrency. Don't mention a lot of younger folks that are thinking about, oh, why not we try something new, right? And one of the things I have to share a little bit is about all the older generations, right? And we see the older generations, they are ultra wealthy, let's say families and companies, maybe owning like billions of dollars. And some of them are my clients, and they're looking at cryptocurrency, and they're looking at crypto space. However, a lot of times they don't know how to deal with it, right? They need very trusted person to help them. They are not going to, let's say, open a Coinbase account, right, and open a OKEX account and just do the transfer. They're not going to do that. They're looking at it not just as a way to preserve their wealth, but also as a way to transfer the money, and as a way to really to diversify their investment portfolio.
So the Kimchi Premium, so-called Kimchi Premium, which really put sort of an extra cost onto Bitcoin in Korea. A lot of people say as a result of the frictions caused by capital controls, there's a certain risk of using it, so the price sort of came up, probably related to liquidity. Are there any more of those premiums being baked in? Are they being costed into any other assets? And I'm thinking Tether, for example. If you buy Tether in an area with capital controls, are you still paying $1 for that USDT?
You mean in Korea?
Anywhere with capital controls.
I think there's a premium over there because like in Brazil, Tether is being sold for 1.3 US dollar, and then like for Argentina, it's more than $1 as well. And then regarding the Kimchi Premium that you just mentioned, it's like, I think personally the main causes of the Kimchi Premium is like, do you remember like 2 years ago, roughly this time, like China actually starting banning all the exchange from trading and then from withdrawing all the cryptos. And then that time there's no safe haven like Tether. I mean, there is, but it's not so famous and not so popular. So since then, because like China is a biggest exporter of Bitcoin and also biggest consumer of the Bitcoin because like people buy and trade. So they're actually looking for other safe haven to trade the crypto. And like 2 years ago, there's not so many crypto exchange in the world. And then Korean, they are the biggest buyer in the crypto, just next to the China. And then, so actually most of the Chinese, they just moved their crypto and then, I mean, the spaces to Bithumb, because Bithumb that time is the like biggest exchange in the world. And then most of the buying demand is actually coming from Korean, and then they are keep on driving up all the price. And then there's one thing that what we are just keep on mentioning is like capital control. So people sell it into Korean won in Korea. They have no way to cash out. And then what they can do is only just keep on preserving and then keep on keep on maintaining the buying actions until the point like later the stricter KYC is implemented and then people start to cash out. Yeah.
And so what assets are being used for this? Is it strictly Bitcoin? Has it come from being mostly Bitcoin to something else? What volumes do you see that take up most of this maneuvering?
You mean Kimchi Premium?
No. Oh, yeah. Well, Kimchi Premium, but just which digital assets are used in a volume sense to get around some of these capital controls? Do people use Tron, for example, which I doubt?
That time, Trump is not listed in.
Sure. I mean now,
Yeah.
though. I mean currently.
Like,
yeah.
Currently, I mean they're actually just using the main token like Bitcoin, and then if you see the Kimchi Premium is like applied over. I mean, it's an over pump, then they'll move to another asset. So, I mean, this is like client action we can't predict.
Yeah, sure. But just wondering what the perspective is, you know. So, from what I've seen, you know, it went from sort of mostly Bitcoin to Tether becoming a main liquidity pool within a lot of these countries. And perhaps one of the reasons why Tether's volume is so large these days, and perhaps why it steamrolls all of these bad news stories around Tether. People don't really care. Yeah. They just need something, and there is enough liquidity now, therefore it became useful. Is that something you're seeing in the market? Is that something you're seeing traders have a large demand for?
Yes, this is true, because like liquidity is the most important factors in trading in all the financial assets. So Tether being like mostly held by the big players, so they have the most liquidity, and then I mean you don't have to pay premiums to buy that. And then like even though like they have so many bad news, they are still being used by many, like what you mentioned just now, like people used to do the trades. I mean like cross-border like clearing, like Russian and China. I mean they use the Tether in order to complete their deals. Like, I mean, there are many use cases applied to the stable coin, and then like Tether being the one of the major and then the most early stable coin. I think they are the first one, maybe just before the digital gold in US. So, I mean, their position is already there, and then the holders is there, and then even the big players use it to do the trading as a main pair. I mean, yeah.
And could you describe a bit the mechanics of how someone would make one of these trades? Because exchanges aren't open to them, right? So what does a typical person looking to hedge against devaluation do? Where do they buy it? Where do they go? From your perspective, where do they go?
You mean hedging against the price movement?
So if you're living in one of these, if you're living in China, for example, and you don't have access to a retail exchange, how do you go about acquiring a cryptocurrency to get around it?
I think you are the best guy to answer this.
We can see a significant number of cases reportedly in the past few months that regulators are looking at OTC market, and you know, for the retail folks, they have Chinese renminbi, and they need a USDT, you know, to buy Bitcoin. But sometimes it involves potential money laundering issues, and you know, involves terrorist financing issues, and in violation of banking-related laws and regulations and stuff like that.
So we can feel that OTC cases are coming out. Actually, yesterday there was one case that referred by one of our offices in China that also related to the OTC market. So that's one of the things probably you want to.
And as I understand it, from what I've read about China, is the government has said the OTC market is going to remain legal simply because you can do its property. It's been recognized as virtual property, and a person can do what they wish with their property. They can throw it away, they can give it away, or they can sell it. Is this something that gives the market confidence in China?
There have been a lot of rumors, coming out of the country simply because of the level of transparency is not the same as Western nations as in the United States and Singapore. So sometimes I don't think the news are coming are very authentic. And if we are looking at the news that you mentioned, I would say it's possible. There's some sort of government regulators are saying things like that, but policy regulations are very different from implementation of that rules and explanation. So anytime, whenever we are dealing with a transaction related to China, we not only need to look at the policy, but also very important how that policy is going to be executed, implemented, which is very important.
Got it. So my final question is really about the future. So there's no right or wrong answer here. It's kind of a bit of imagination. Is there a scenario where you see the power of cryptocurrency to get around capital controls? So the power of it, the ability of it to just run right through them. Is there a world where, let's say, liquidity is no longer an issue? Will it ever be strong enough to make one of these central banks think twice?
Look at the People's Bank of China. They recently issued a statement on the China's sovereign, digital assets, digital currency, and I think it's significantly one of the things that everybody's excited about. That our highest banking regulator and monetary making decision power ministry is thinking about cryptocurrency. So I think so, and I think they are learning and they are developing their strategies responding to the currently evolving industry. But whether or not that will be, help with capital control, this is something that I cannot really envision in the future. Mr. Shane?
And for me personally, I think the future of the cryptocurrency is just like, blockchain is a method. And then you can see that Libra, they actually create a new way of defining the value. It's like, maybe they use like gold as a back-end value, like US dollar and other assets. Blockchain itself means the cryptocurrency, and then cryptocurrency itself is just a method. So the way for people to exchange value, blockchain is being used as methods to change the people to exchange the value, and then so in future, the adoption will be widely spread, and then for the government, they are just moving forward. Moving more friendly towards all the regulations, just like as we just see the Bobby just now his presentation, more and more country is now issuing the license for exchange. So this kind of trading is being formalized, recognized by the government, and then all the regulators around the world. They know what happens for cryptocurrency. It's now very different from 2 years ago. When government, when they listen about, when they heard about the Bitcoin and cryptocurrency, they're just thinking, oh, this is something for money laundering. This is something for some bad thing for drugs. Yeah, the government is moving more friendly now, and then they see the value, they see the tax benefit, they see all the capital inflow. Good point. And then, yeah.
Does it force the Chinese, let's say the renminbi, to say it is converted or turned into this digital currency? Does it force them necessarily to have to adopt a more developed country attitude towards these kinds of policies?
I think we are certainly see in the past few 10 or 15 years that the capital control has been relaxed in the past. You know, it was extremely to convert RMB to US dollar, regardless of how much it is. But nowadays, it has been relaxed pretty significantly. And I'm pretty sure that with all the new innovations are coming out and with all the technology coming out, and whether or not the government like it, they need to learn it. You know, they need to adopt their new strategy of working with people like us, right? And for the people in the tech industry, I think whether or not we like regulators, and they are there, and we need to be open to their talk, and we need to be open to sharing our stories, and only talk can help.
Well, wonderful, guys. We're out of time. The light's beeping. So tremendous, guys. Thanks a lot.
Thank you.
Thank you.